Stop trading IFVGs and start trading this. I'm telling you. So we're gonna do a little trade review of the day. So coming into NQ in the morning, if we look at a 4-hour time frame, we are delivering still from this 4-hour fair value gap right here. On the daily chart, we left these highs untouched yesterday, so I'm gonna go with my bias being bullish for the day. So dropping down, trying to find out like what are the main fair value gaps in play. So I have a 30-minute one right here that wasn't being respected yet. So we were up close by here, so I dropped down to a 15-minute and I found this fair value gap right here, and then we had this internal buy side high sitting right there. So those were kind of my targets that I wanted to see manipulated into and then distributed down. So coming into the 2-minute, show you guys the executions. So there's actually the 1-minute chart. So right here we have our first HST model. We swept this low right there, and then we were also delivering from this fair value gap right there. So we had that delivery from there. My entry was right here when I broke that bar's high, and I got my TP right there, and then I got stopped out at break even. So there was entry number 1 for the day. There's the FVG right there. So yeah, and then continue on down. So we clearly had saw, so in the morning we saw that buy side was taken, and so after that it kind of just like kind of turtle soup. So we were kind of just like, all right, I'm gonna be bearish for the day instead of bullish, especially seeing this reaction. So we dropped down to the 15-minute time frame, and I try to see like what these fair value gaps are. So we got one right here, and so that was where I think in price was headed next. So it came down to that, while also sweeping these internal lows right here. So we had the 15-minute fair value gap, we had the sell side being swept right there. And then from there, so we got check 1, check 2, right? A sweep of liquidity, and then we need a delivery from a fair value gap. So we have our entry right here. I took this on the 2-minute chart, that's why it looks like this, but so the entry would have really been right there. Stop loss below, and look, this hit 2R and went up into 3R. So I took my profits and I killed the whole trade right there. So that was my my trades for the day. But look, you could have traded this all day today, right? So let's take these off. So let's try to find another setup. So, well, we have the H1 right here that we took, okay, and then after that pulls up, stops us out. What does the same thing, right? All it does is sweep liquidity right there. We're still inside of that 15-minute fair value gap. So you can take the same entry again right here and can go for your half hour, and you would have got that and then stopped out. That's not necessarily like the ideal way. You don't want to be trading back to back like that. It's not, going to lead you anywhere smart. But okay, so right here, right, we have another play right here. So we have sweep of liquidity that right there and that right there, right? And then we have our fair value gap right here. So we get our sweep and then we have our delivery, right? So then our entry is right here on the L1. So we enter when it breaks the bars low, right? That's where we want it to be entering. So we enter, stops above, and you can go for your 1R target and then stop to break even, right? So then it works again on the flip side, right? We sweep liquidity, we're inside the fair value gap, and then you take out the bars low, and then yeah, so stop above, right there. That one would have got you to 2R, and then stopped you out of break even. All right. So what about this one down here? Comes down, sweeps liquidity. It's inside these on a higher time frame. This will be uh, a fair value gap, so it dips into that, and boom, entry right there, and then take it to wherever you want. Your 1R, your that. I don't really care where you want to take it. So again, if we look at it again right here, look, you got a L1. That probably would have hit your half R and stopped out. Boom, you get another second entry right there, right? L2 entry right here. Take that one. Boom, made you money, right? It's just, you guys, this thing just repeats and repeats and repeats and repeats and repeats, right? So let's look at a difference between the IFVG model. So IFVG traders today, they would have taken, I believe Dodgy took this one, right? So your entry was, look at this, man. Your entry is right here, all the way up here. Look where my entry is. Right here, right? Look at that. Look at that, man. That is, let's see, 548. Listen, dude, that's like 80 points. Okay? It's an 80-point difference where you're getting in on IFVGs and where I'm pretty much getting it out, right? And you're going to see it time and time again, right? What about this one right here? See? There's your entry. Okay? Here's my entry, right? Right there at 608, 635. Okay? I'm taking profits where you guys are getting in, okay? It just happens again and again and again and again. So I'm telling you guys, HST model is the way. Join the Discord. It will not be free for very long, only while I grow this channel. So thank you all.